Hello everyone. It's the 11th of February. Welcome. I'm Chris, Elliott Wave Cafe. As always, welcome to today's daily kind of review of the market. It was a pretty dull day, if you ask me. Not a lot has happened, although the one thing to mention is the fact that we did get apparently a pretty impressive job number versus whatever was expected. The market had an initial good reaction, but then I don't even know, like 15, 20 minutes, 30 minutes into the print, after the print, we completely reversed and we ended up having more of a almost like a down day, flat day, what have you. So it was nothing spectacular. Nowhere I looked, I saw anything that's super interesting. The reason I'm showing you these charts or this particular chart is just to kind of see where we are when we look at the top, which is the Qs, the S&P and the Dow Jones, and where they are in relationship with their 50-day moving average. And this is kind of we're trying to find out who's leading who, and if we can notice anything. But we continue to have a huge divergence between the tech sector and the SPY, the Dow Jones, between growth and value, between the Qs and the NYSE, between the Nasdaq and the NYSE. So it's definitely a move away from growth and from risk, for that matter. So they hit the small caps today a little bit more. I don't have the chart in here, but they did get hit, I think, the worst of the day. So the Qs are below their 50-day moving average and can't seem to get any traction. The S&P, it's really struggling with the 700 level, and continues to find offers every time it gets up there. It hasn't really staged any significant sell-off yet, or at least a break of the 680 low. We'll see. And then Dow Jones, after that strong breakout, you would have thought that it would have maybe a bit more traction, but that's also kind of slowing down. So I I continue to not have a good vibe about the way this market acts. It needs to prove me wrong. I'm sure it's frustrating for a lot of people, but this is kind of what happened today. I mean, if you come into the day and you're like, well, finally we're going to have some type of an action. Here was the move after the 7:30 news, and then all of a sudden we just kind of collapsed lower. Then we went up, and then just kind of halfway it just went nowhere fast. Same on the Nasdaq, although the Nasdaq recovered a little bit more. The Dow Jones was the one that was a little bit weaker in my view, because it really overtook yesterday's lows and then just kind of um, pushed back a little bit, but not much. I don't have I don't have a good vibe. This is kind of what's happening on the daily on the Dow, and it's got to go. If it's it doesn't have to do anything, but it's here we are in February, not going anywhere. Bitcoin. Um, I talked in a bit more detail last night about the wave count, so go ahead and revisit that if you want it. It's a kind of look at some potential corrective wave patterns and how they unfold, and some of the stuff there. And I did mention this briefly, I think, in terms of this pullback into the 61.8. If this could be the level where if this is a wave A or a wave one of the lows, towards the 61.8 is where they'd revisit. It gives everybody the impression that we're going to go to new lows, and we find bids in there, and then we get out of there and we maybe try to go higher and overtake this high. It's a play against the trend. I would not recommend it, but that's kind of one of the ways where you can kind of pay attention and see if they have enough power in here. For me, I need to see some black candles coming up. I mean, the last 3 days have been red. So all these moving averages are pointing lower. There's nothing to do there. I'm not going to kind of stretch this any more than it really needs to be. Ethereum, it's right there at the 61.8. Maybe it needs a bit lower, but again, we're going to watch these reactions now, right? This is what's important. We've had few days of buying after those kind of capitulation lows or those big sell-offs, And the question is now, are we going to be met with buying on the subsequent test, or are we going to continue to fail? By the way this looks, 1, 2, 3, 4, 5, that would be a 1, a 2, and if this is a 3, it's probably a 4, and then we're going lower. Just to kind of complete some kind of a pattern, I would not say that just because you make a new low, that would be the end of the fifth wave. You would have to look for signs, and the market would have to show you that it is finding, but it could be kind of in a final declining stage based on the wave count, and then look for some kind of a bounce. And that's kind of what I'm thinking. The dollar did not do a whole lot. It's a bit bullish again. It's just kind of trying to hold the sell-off against this rally, but it's against all the moving averages. Nothing there. Silver and gold, they're just kind of consolidating in here. I'm remaining on that fourth wave idea, and that's about it. I'm going to keep this short, and we'll see how the market behaves tomorrow. If there's any other interesting things in the meantime, you can find me on Discord, YouTube, Substack, and on Twitter as well. All right, talk to you later. Bye.